All right, what's going on, guys? We have a market review today. It is non-farm payroll week, currently Monday, June 3rd. So starting off here on the daily chart for the dollar index. All right, shared this in the Discord. I like this sell side down here, but more specifically this low down here as a potential draw. And you see with today's trading, beautiful sell-off. All right, trading inside of this new day opening gap between this candle's close, that candle's open. All right, that was a draw for me. We also had this low down here. That was sell side. And pretty obvious where we're headed next. Sell side down here, which is also relative equal lows. And before we head to the NASDAQ real quick, I outlined this breaker in a live stream. We have this high, this low, higher high. Last down close candle in between your two highs here. That is your bearish breaker. Draw that through. We had high impact news come out at 10 o'clock. Look at the body here, opening right at mean threshold of the bearish breaker. We open immediately, one candle, trading down to that new day opening gap on the daily chart. Retrace, fair value gap, institutional order flow entry drill, sell off, and then if we go back to daily chart, all right, this is your next draw on liquidity. All right, so look at the NASDAQ here, daily chart. We have this fair value gap that we traded into. Okay, this is Monday's trading here. We just opened up new trading here on Tuesday. But we traded up into this fair value gap, completely repricing that in. Came off this high, traded down. Right, I also shared in the Discord, I favor higher prices in the NASDAQ as long as we don't close below midpoint of consequent encroachment of this wick. So as long as we stay above midpoint of this wick on a closing basis on the daily chart, I'm bullish and still favor higher prices. All right, so trading inside this daily fair value gap. Let's go to the hourly chart. All right, trading up, clearing the buy side above this high. Okay, trading to the high of that daily fair value gap. Last up close candle before this rotation lower is a bearish order block. Draw that through, hit it beautifully there. We sell off. This fair value gap here is also a balanced price range. Right, take consequent encroachment of that, draw it through. See the beautiful reaction there. And then we retrace back into this range here. 15-minute chart. All right, do a bit more detail here. We have sell side resting beneath this low here. And right under sell side, we have this 15-minute fair value gap. All right, so we trade up to the high of that daily SIBI, daily fair value gap. Break lower, up close candle, bearish order block. Working it here, break lower. Okay, this first fair value gap is a breakaway gap. We don't want to see that traded to. This is what you want to see, send price lower. Trade up, boom, tag the sell side. Now how much farther below the sell side can price go? Next discount array is this fair value gap here. Clearing the sell side, trading into that 15-minute fair value gap. We rally, breakaway gap. You want to see majority of this stay open. We get that here. All right, this upper fair value gap here, small little inefficiency between this candle's high and that candle's low. There's a fair value gap there. You want to see that support price. We get it beautifully here. Rally up, clearing the buy side, and trading back to that daily fair value gap. 5-minute chart. All right, that's that same sell side level you have annotated here and that 15-minute fair value gap that we outlined. All right, trading to the high of that, breaking down, fair value gap. This is your silver bullet on the 5-minute time frame. Okay, we had news at 10 o'clock. That's this long wick here. You can also take consequent encroachment of that wick, draw it through, acts as resistance, consequent encroachment of this fair value gap as well, laying on top of this wick. Sends price lower. Fair value gap, silver bullet. You could take this entry because we have yet to take out sell side here. This sell side and that 15-minute fair value gap is your draw on liquidity. So if we haven't tagged these yet, this is a valid shorting opportunity. You can see us working that lower half of the fair value gap here, which is what we like to see. This is a sign that price is still heavy, still bearish, unwilling to close past midpoint. Rotate lower, clearing that sell side. How much farther can we go? That fair value gap on the 15-minute chart. Trade there, rally up, institutional order flow entry drill, small partial entry inside this fair value gap. These consecutive down close candles is also one bullish order block. We drop down, slowly retrace, clearing the buy side up here in the PM session, trading into the low of that fair value gap. All right, last but not least, 1 minute chart. Pretty much the same thing here, not much to really analyze. Trading up, higher the daily fair value gap. We consolidate a little bit inside this SIBI. Okay, consolidate, finally break lower. Small fair value gap in here, trading up into that. Let's look at a little bit more detail here. If you take consequent encroachment of this wick, notice the bodies. So we overshoot this fair value gap here. Yes, let me take this off so you can see. We have a fair value gap in here. We overshoot that a little bit. How much farther past this fair value gap can you expect price to go? Consequent encroachment of this wick. Draw that through. See the bodies respecting that. Then we rotate lower. All right, remember our sell side objective we outlined on the 15-minute chart. That's our drawn liquidity. 11 o'clock macro, 10:50 to 11:10. All right, I can't stress this enough. That is your profit taking hour. As you approach 11 o'clock, scale out your position, take profits because you can expect some sort of retracement, reversal, or consolidation as you approach this macro. We sold off all morning. We enter 11 o'clock, clearing out this short-term low here, reverse. This up close candle is a bullish breaker. Low, high, lower, low. Trading into the up close candle, these consecutive down close candles here, all of these down close candles, one bullish order block. Okay, trading into it there, trading into it here, order block. Rally up inside of this fair value gap. We consolidate ahead of lunch. All right, lunch, 12 o'clock. We begin to run lower, tagging the sell side, and then that 15-minute fair value gap here. As we enter the PM session, not much going on, just sideways consolidation. All right, and then we do have that market on close macro, okay? So 315 to 345 is your market on close macro. Okay, you can expect a price run to form within these 30 minutes. Down close candles, a bullish order block. Trading into it here. Trading into it here. And then we rally. Fair value gap, small inefficiency here. Right there. Drop down into it. Down close candle, it's a bullish order block. Look at the entire range of that wick. Should offer support. Drop down, and we rally. Clearing the buy side above this high. And again, trading into the low of that daily fair value gap we outlined right here. So that's pretty much it. Not a hard day in the market. I did have a red day. No big deal. We're back at it at 9:30. All right, subscribers. We do have a free live stream Thursday, I believe. It is NFP Thursday. So I won't be pressing buttons on Thursday. It will just be a tape reading session. So that'll be fun. But subscribers in the Discord, we are back in the market trading live again at 9:30. All right, if you have any questions, feel free to reach out, message me privately or in the public chat room or in the comment section of this video. Make sure to leave a thumbs up, subscribe. Okay, these videos take a while for me to make and mark up the charts and all of that. So it would be very much appreciated to show some love by simply liking the video, leaving a comment, and subscribing. All right, love you guys. I'll see you guys in live stream tomorrow morning at 9:30. All right, peace.